Hey everybody, this is John and welcome to the free video. And what do we got cooking here? Well, tomorrow is the last day of the quarter, and you can see that Amazon here has had a fantastic run. And what's interesting here is if we just kind of look at, 2016, kind of where we started and where we are, it's a lot of kind of getting things back. Kind of marking things up to make the quarterly statements at least look decent. And I suspect that I am very hesitant tomorrow to be long much. I think that once the idea is that we've had the kind of the markup here. Let's put Q1 to bed. The funds can breathe a sigh of relief, and we just may see some pent-up selling. So part of what we did today is we did trim back positions considerably on Facebook. Took profits there. Took profits on Netflix. Just kind of running the gamut and just kind of keeping things light. I think that Thursday we could start to see some selling into the close. Friday, of course, is the first day of a new quarter, and that could either be it's kind of one or the other. It's either an explosion higher or a rollover. But at this point, just even the indexes are so extended. It's hard for me to get excited about taking new long positions here. So this looks good, right? I mean I think that's strong, that's bullish. And I don't necessarily want to short it, but at the same time, we're at the top of the channel. That's not where we take new long positions, okay? So anyway, so that's what we got. So there are some stocks where I think some call credit spreads make sense. Most notably is REGN, and this is one where, it's not, let's see, this is one where it's not like there's a ton of volume on this one, so I'm not a big fan of buying calls or buying puts. But the idea with this is we go out 16 days. You can see that the at-the-money call is $12. So just trading sideways over 16 days, that expires worthless. But of course, it's also got a bearish setup. Now what I did here is I sold that 360 call and then bought the 380 as protection, so I don't have to tie up a ton of capital on this. And this is about I think it's about a 1.25 to 1 risk to reward ratio. So if we look at this, our max profit on this would be $8,160 versus a max loss of $11,000. Okay, now obviously you're going to position size this according to your account size. If you're trading a $20,000 account, you're not going to do 10 contracts. But this is I like this, and you can see here that the up to 370, it's actually not too much of a hit. Okay. But obviously, if we get to that max 380, that's where it kind of goes. So what gives me confidence in this trade is that, well, first of all, just as I said, that I think the markets in and of themselves are extended. So I'm not crazy about new longs here. But what I also like is that, on a weekly chart, we still have momentum going lower. On a daily chart, momentum's mostly going lower here. This may rotate, but we've got a squeeze setting up on the 195-minute chart. And the idea here that this would trigger to the short side and potentially even take our EGN to new lows. All we need is that it just chops around down here. And then obviously if it, takes off, that becomes a problem, okay? But I like the trade. I think it ties well with the markets. I think it ties well with this particular setup. All right, we got a lot to cover in the premium video tonight. Tons of correlations to talk about, new trade in TLT and all that kind of fun stuff. So let's dive into that. You guys have a good night, and we'll see you at the next update.